we'll get started with the class now. All right, today we'll be discussing Fibonacci 2. Fibonacci 2. Yesterday we discussed fundamental analysis and we did some analysis in the class. I can't remember the pairs we even checked out yesterday. I think we did UJ. We need to catch JPY. Okay. So today we'll be discussing the Fibonacci tool, how to use it also as a confirmation tool for our trades. How to use it for a confirmation tool for our trades. How to use it for a confirmation tool. The spelling of Fibonacci. F-I-B-O-N-A-C-C-I. If you notice, I'm a bit practical. I don't go up all around theories of who is Fibonacci and how the definition of Fibonacci, all those ones. I go straight to the point because we don't have much time. How do we use the Fibonacci tool? What is the significance? Okay. Now we know that when we have a trend, for example, when we have a trend, now there are some, we expect that a bearish trend, for example, will be forming a lower low, lower high, lower low, lower high. Please, it's very important to follow me. I picked it. Okay. Lower high and then lower low. Now, the Fibonacci tool is a tool that is used to look for psychological areas of turn or reversals in the market. We call it psychological areas of reversal in the market. It does not always it's not always perfect, but from research, it's seen that market always repeat a pattern. They always repeat a pattern. So the person who invented this tool discovered that there is a particular ratio in which he notices that the market always responds to from time to time for it to turn. So that was how I developed that tool, and that tool is this tool right here. You can see we have Fibonacci retracement tool. The tool is on every MetaTrader 4. Okay, it's always there. Now he's saying that at particular, I need to first let me edit it and let's make it default. Default. Okay. All right. So by default, this is the Fibonacci tool. Okay. Let me color it. Like you can see, you can always color your Fibonacci tool navy blue. The levels. This red line here, I can decide to make it a straight red line. Okay. You can see that. Now, the idea is the market always turns at these psychological levels. If you look at these numbers right here, we have the 23.6, 38.2, the 50.0, 61.8, and then it's 100%. Which they are saying that if there is a particular trend in the market, for example, a market is going down like this, okay, that there's a point in the market that if this market retraces, of course, it has been bearish to the upside, there is a level by which there are some levels that are psychological that market can always come back down. Okay, so how do you know that those levels will be Fibonacci tool? Is by clicking on the Fibonacci tool. We are looking at the retracement, how much this bearish market will retrace. So we will go from the top of that bearish market to the low of that bearish market. Okay, and then see these levels. We have 23.6, 38.2, 50, 61.8. So the market is, the idea is that this market can actually retrace at any of these levels depending on the condition of the market. It can retrace at any of these levels depending on the condition of the market. If it is a very volatile market, you see market retracing at 23, 23.6 and 38.2. But for a standard retracement, you always see the market coming back into 50 or 61.8. Okay, these ratios apply almost every time in the market. You will see it almost every time. The price will retrace back into those areas, and I'm going to show that to you right now. So you see what we're talking about. Let's delete everything on the chart. Okay, now let's take for example. Let's say, for example, we want to see how much when this market started this bullish move from here, from bottom to this top. We want to see how far it will retrace before it goes up. I can tell you that the retracement can be either 50% or 38.2% or 61.8%. By using the Fibonacci tool, we can pick it from the bottom. Since we are measuring a bullish trend, so we take from the bottom and up to the what? To the top. Now, in what area can you see the Fibonacci retracing? Put it in the chat box. What level did you see the retracement when it started going up again? What level is this? I want to be sure that you can see the numbers. Market retraced back to what level? Let me see. 61.8, beautiful. 61.8 before it continued. Now, let's assume maybe it's just by luck. Let's look at the second wave in this market. Let's look at the second wave. Let's see how far it retraced also. Second wave, the market started from here and stopped at here. Where did it retrace? Put again the chat box. It's not magic. Market always repeats itself. Look at it. Market came into 61.8 again before continuing its journey to the upside. Isn't this beautiful? Okay. Now let's look at let's look for a bearish trend and see if this thing holds also. Let's look for a bearish trend and see if it holds. Let's take this move for example. Market move from here down to this point, and then at this point it also went down to this point. Well, let's see this level. What level is this before it moved down? Let's see if it tallies with any Fibonacci level. This is a bearish, so from top to bottom for a bearish move. Okay, what level is this? It first moved at 38.2. That's when it went down, and then by the time it came up again, it moved at what? 50.0. 50.0. Okay, let's look at it again. Let's look at other ones. Let's have a look at this long move that came down. Let's see this long move, this bullish move here. Let's look at it. Let's take it from bottom to top. Bottom to top. Look right here. Market came into 61.8 but dropped below it. It dropped below it a bit. Okay, that's why we have some traders, they have some extra levels they always add to their Fibonacci, because you can actually edit Fibonacci and put your own levels. Some people use 76.8, some people use 70.5. okay, in addition to the default levels, okay. But I want you to always put in mind that the level of 50, 61.8 is the most common levels where we see retracement in the market. Look at this move from here to here. This move from here to here, and let's see where the market retraces here. This move from here to here, market came, okay, below 61.8 before it moved. It came below 61.8 before it moved. Okay. I'm going to show you the levels I add to my own. The levels I add to my own. Let's see some other currency pairs. Let's USD card. USD card. Now let's look at this move. This bullish move right here. This bullish move right here. Okay. From here to here. How far did it retrace? It came into what? 50, in between 50 and 61.8 before it decreased. Let's look at the second wave. The second wave started from here, pull it up. It came, also touched the 50. You can see, also touched the 50 before it retraced. Okay. Now, I'm going to talk about your trade, how you can trade with this. At least you can use it for confirmation of your trend. Let's look at this bearish trend. This bearish trend. You can use this on any time frame from here to here. What level is this? 61.8. 61.8. Okay. Then we have from here. Let's take from this second wave is from here to here. Okay. When it got here, it came into 38.2. Came in 38.2 before dropping. Okay. Now, let's look at this wave. Let's start from this. Even the smallest, tiniest wave can also give you something. Look at this small wave here. Came into 61.8 before continuing its journey up. Okay. Let's look at the second wave. That's from here to this place. Market came into 50. It actually ranged around the 50 level before flying up. It ranged, was touching 50, ranging with around 50 before it pushed up. Let's check if even small movements from here to here. Where is this? Between 50 and 61.8. Even small movements, you can see it from here to here, where the market comes to continue on 50. Okay, you can see those are ways you can know when market wants to continue, how much market will retrace before it continues its journey. How much market will retrace before it continues its journey. Let's look at one more currency pair, and then I'll now discuss how do we use it in our trades. How do we use it in our trades? Okay. Let's look at this from here to here. Let's even take bearish moves. Let's take bearish moves. Okay, we can see from here down to this place, market came into 38.2 because it's a very volatile market before it continued its journey. And then we can see from here to here, it came into 23.6 before it continues its journey. Okay, and then this last wave here, what happened to it? Market made 100% retracement. It made 100% retracement. 100% retracement before continuing down. Now, I want you to know how to draw this thing properly. If you are looking at a bullish wave, where do you start from? Where do you start to pull your fifth form, put it in the chat box. If you are looking at the bullish wave, where do you start? Which point do you start pulling your fib? Is it from the lower end or from the upper end? Put it in the chat box, please. Is it from the low of the move, or from the okay? So this says lower end. Do we all agree? Lower end. Beautiful. So if you are looking for this wave, let's see. Pull from the what? Lower end up to the top, and then see where market came back into. Market came back into 61.8 before flying off. Okay, and then we have another wave right here. From here to this point, we retrace again to 50%, and then moves up. Now, if you look at the next wave, that's this wave from here to here. That's from here to here. Move from here to here. Market came into what? 61.8 before moving up. Are you seeing it? Are you seeing it? You see these things many times in the market. Many times in the market. Now, personally, there is an area I call the golden zone. You can also use that. You can write it down. The golden zone. The golden zone is the area of the Fibonacci between the 50 and the 61.8. 50 and 61.8. For example, if I pull my fib here, I'm always looking for a major pullback into the golden zone. This is the golden zone. For those of people who used to know my chart, see my charts when I sometime back, I used to paint my golden zone and wait for price to retrace back into it. To retrace back into the golden zone. Okay? Once you retrace back in the golden zone, I begin to look for bullish moves. Okay? Now imagine the market was retracing, and probably I have drawn this pullback here. I've seen that this market is pulling back right here, having a bullish descending wedge. Okay, descending wedge. I'll be waiting that okay, whenever this market comes into the golden zone, I should be what? Looking for a possible move up. A possible move up, and look at what the market did. Came into golden zone right here and then moved up. Now, even this small tiny wave that came into this place, it's very possible that this also applies. Let's look at this from here to here. Let's see this move down to this place. Let's see from here down to this place. Okay, that one did not enter the golden zone, but just stopped at 38.2. Why? Because it's a very volatile move right there. Now, let's look at daily time frame. This is how you can catch big moves. This is how you can catch big moves. You can catch big moves in the market. For example, from here to here, market came into, this one is very, this is 23.6 before it moved. When it got to this place, it gave us a reversal signal. But let's look at even JPY. Let's look at JPY. Market move from here down to this place, and then I know that there's a support area here, and market broke it down. Okay, I can also use, when market came back into this place, I can also use my Fibonacci to also test if it is a contesting Fibonacci level. Okay, so I put my Fibonacci from up to bottom. I can see market is actually, and it entered the golden zone. So what does that mean? It's a confirmation that I have a solid reversal. Market came down, came into a support area, like a retest, gave me, touched the golden zone, and so gave me reversal candle, a candlestick pattern, reversal candle. This is a what? This is like a inverted, this is like a doji, right? That's like a doji candle. This is like a doji candle here, right here. Okay, so this is showing me that this market is actually going to reverse at this point. Now, let's look at another wave. The next wave was from here down to this place. That's the next wave. Let me delete this. Delete this. Some people actually trade just this Fibonacci tool with other things. Okay, they trade now. This next wave did not actually came into the golden zone and dropped. Really, it came back into the golden zone and dropped before going up again, and dropped before going up. Let's look at other waves in the market. Okay, now look at this wave, from this wave down to this place, from this wave down to this place, and the market pushed up up to this point and then dropped. Now, can we have a confirmation with this Fibonacci? You can see beautifully it entered into the golden zone, gave us a bearish engulfing candle. When it entered, it will give us a bearish engulfing candle. I can see the market tanked. The market tanked. Fibonacci is a very good tool to also confirm that if you are good to go in a particular move. Let's look at from here to here also. From here to here also. Let's look at this level. From here down to this place. You can see market pushed again into golden zone before continuing down. Can you see that? When it started retracing, it pushed up. When it got to the golden zone, what did it do? It tanked, went down. Can you see the magic of the Fibonacci tool? It's very, very powerful. I tell you, very powerful. Let's see again, so that we establish the power of this. Okay, can fully establish the power of this. See this first move on GG. Market came back. It broke the golden zone, but around 61.8, it gave us a what? It's like a tweezer top or railroad track candlestick pattern. Tweezer top or railroad track candlestick pattern. The market came back to this way. It gave us a tweezer top at 61.8 level. It's a beautiful one for itself. Okay. The next wave is from here to here. What the market came into the golden zone. In fact, the golden zone held for a long time. So let's just say the market came down here, golden zone, came down again. This level held for a long time. Keep holding before it tanked. Okay. So if you're looking at it now, you entered the trade here. You are in profit. Okay, let's see. Don't mind me, I like talking profit. So for example, this is a weekly time frame. I can also try to say, okay, where would this market, this is reversing now, where is likely that this market will get to before it starts coming down? I can draw it down. Okay, what I do is draw it down, color my golden zone. This is my golden zone. Is there any area of significance around this golden zone that you think might make the market want to tank? Okay, I have an area of support resistance around this place. You can see this area. You can see, let's see. You can see there's an area of support around this place, around this area. So if you want to put it very well, something like this, that's an area of support. Okay, so there's every likelihood that when market gets to this area, this is GBP JPY, that it may not go up further again. You can see this area, very strong support resistance area in the past. So, and then it's aligning with the golden zone that we have here. aligning with our golden zone. So which means as we are buying GJ, we've been buying GJ for a long time. You should be expecting that when market gets to this point, there might definitely be a reaction. There might be a pullback. There might be a pullback up to this place, and the market continues on a bearish move. So this is like I've set a trap already. I could actually leave my chart this way and wait, and wait until when market gets to this point. I'll be looking for what? A sell opportunity. This is weekly time frame, and it's a trap that I've set there. Okay, that when market comes to this place, it's very possible that it's going to what? It's going to tank. It's going to come down. Just going to bleed. Okay, so this is how the Fibonacci tool works. Now, if we are trading with the Fibonacci tool, it can also help us in knowing where to take profit. It can help us in knowing where to take profit whenever we are into any trade. Okay, and help us to know where to take profit. That's why sometimes we have some Forex traders like me. I always edit my Fibonacci tool. Fibonacci level. Okay, my own 0 level, I take it as my take profit 1. You can see what I did. I clicked on properties of the Fibonacci, and then where we have description, I put take profit 1. Please look at this. If I want it to display the price at that take profit 1, I'm going to put at percentage dollar. Okay, at percentage dollar. You see what that will do now. I click OK. What did it do? You can see instead of 0.0 here, it's giving me TP at 123.987. This simply means that the price at this point is 123.987. So how do I apply this? For example, let's assume I do this guy. It came into this place, okay, and I entered around this place. My first take profit is definitely at the beginning of the wave. Because this market can come down and probably do a double bottom and go up, right? We double bottom at this place and go up. So why not just once I enter in this place, take my first profit at this place. The next level could be here. Okay, if it breaks through this place, then we're looking at probably this area for the market to come. And of course, the market already came down to this area. So I'm going to extend my take profit levels. I'm going to use the one I used to use. Okay, let me just, I'm going to add to it, add minus 127. Am I right? Sorry. Minus 0.127. Yeah, minus 0.127. Okay, let me see. Sorry, I've already set my level, so I don't know. Please let me confirm my level, please. Let me check with my other. So just give me a minute, please. Let me check. Okay, sorry. It's minus 0.27. That's my first, my take profit 2. 0.27. Okay. TP2. Then I put at percentage dollar. This percentage dollar will give you the price at that point. Okay. That's my TP2. And then my TP3 is minus 0.618. 0.618 minus 0.618. That is my take profit 3. If I'm going to be using the Fibonacci to percentage dollar. Okay, so that's it. So this is my take profit 2 level, and this is my take profit 3 level. And if you look at it, if I took my profit, take profit 1 here, my take profit 2 is here, which was it, and then take profit 3 is here, which was also it. Okay, now once you set it once, it sets for life, except you edit it. So if I delete it and I use it somewhere else, let's take this move, for example, this move, and okay, let's take this first move, and the market came back to this point. Let's see our take profit levels. So we'll move from here up to this point. Okay, market came into 50%, came to 50%, and then our take profit 1 is definitely this point, which the market came and hit it. Take profit 2 was hit, but it did not go up to take profit 3. Okay, so took take profit 1, took take profit 2. Now let's look for another one. Let's look for another one, another possible one. Let's take this move, for example, this move just from here to here, using the Fibonacci tool, from here to here. Okay, market came into where? The golden zone. Market came to the golden zone. This is my take profit 1, my take profit 2, take profit 3. If you look at take profit 3, it's actually aligned with this resistance area. In fact, all the take profit levels aligned with look at take profit 2 aligned with this support area. Okay, take profit 3 didn't fully align with this resistance, but almost hitting it. Okay, now let's look at a bigger wave. Let's look at a bigger wave in the market. Let's see. Okay, let's say this wave, for example, this wave from here to here. From here to here, we'll measure it from top to bottom. Market came back, it was a bit above 61.8. But do you know what? Market came and touched this take profit 1. It also eventually came also and touched take profit 2. But then it didn't go up to take profit 3 level. That's another one. Okay, I'm showing you how I use my Fibonacci to at least get the level of my take profits. Now let's take this wave also. This wave, long wave from here to here. Market came into 50%. Market, in fact, this golden zone held for a long time. You can see it. This golden zone held for a long time, and the take profit 1 level is where? Is right here. Take profit 2 is right here. After take profit 2, market really turned. So that's another one. Okay, let's check other pairs. Let's look at EUSND. Let's start. Okay, let's start from this low. First, market moved from here to this place. It came and touched 38.2. 38.2 took out all the 3. Most of the time, I notice that when the market is very volatile and probably reverse at 38.2, it most of the time hits the take profit 3. But if it is within the golden zone, maximum at least take profit 2, you should eat it. Okay, the worst case scenario is always eat your take profit 1. So this one eats the 3 take profit levels. Now let's look at the next wave. This wave right here from here up to this point. Okay, market came below 61.8. I'm sure it touched one other level that I always use. Let me put that level at 76.8. 6.8. Check. Let me check. Come in. 78.6. That's my other level. I have to check my other. So 0.786, which is 78.6 level. That's my extra level that I always add. Okay, I can see market touch there. So if you want to see, anytime you see my Fibonacci, this is what you will always see. These are the areas you always, whenever I use Fibonacci, extra 78.2. Okay, and then my take profit, the instead of 0.0, I use that as my take profit 1. My take profit 2 is minus 0.27, and my take profit 3 is minus 0.618. You can note that down. Can do that if you like my own style. Okay, you can use that. Other people have different ways that they use their own. Okay, so that's second wave, and then we have the third wave. This third wave is very long, but it came back into 38, came back to 38.2, and what happened? It took out level 1, took out level 2, it almost hit level 3, but it did not get there. It did not get to level 3. It did not get to level 3. Okay, let's see other ones. This market actually was ranging around this space. You may not be able to use Fibonacci in a ranging market. Okay, you may not be able to use Fibonacci in a ranging. This is a ranging market, but when it got here, it started trending again. So let's look at this one wave. Came into 23.6. Obviously, it's going to take 43 because it's very volatile. Has a very strong momentum. When momentum is very strong, market does not reverse so far. So strong momentum, reverse to 23.6, and then you touch all the three take profit levels. Okay, if you miss that move, okay, and you came into probably this second move there, as small as it is, it came below 61.8. You still took out take profit 1, took out take profit. In fact, took out the 3 take profit, even with the small reversal. And then, oops, what did I just? Okay. And then the last wave, that's from here to here. It came into the golden zone and then pushed up, took out take profit 1, but did not take out take profit 2. And then market reversed fully. Okay, now from here, let's take this long move. From here down to here. What did the market do? Market pushed up into the golden zone. This golden zone is beautiful. See, this is the golden zone right here. Market came to kiss it and then dropped, took out take profit 1 before going back up. So I can always tell you that if you are always using just take profit 1, you probably will be making, you probably will be really winning your trades, especially when you use the Fibonacci tool. Look at this. Market came where it almost touched my 78.6 level, but by the time it reversed, it took out take profit 1, took out take profit 2. Okay, so that is that. Even in tiny waves, this can also help you. Look at this tiny wave here. from here to here, from here to here. Market came back to 50%. And what did he do? Took out a profit 1, took out a profit 2. Are you guys enjoying this class? Please, I want to know, are you enjoying this class? I love this tool. This tool is massive. If we use Fibonacci to enter market, where do we put stop loss? Okay, we've talked about that already now. Where do you put stop loss? I'm not personally. What I do is whenever I have look at this. This is a level. You can see this level. This is a level of persistent, dot broken, support. Okay. Now look at this. When market pushed, I'm not putting my stop loss based on the reversal. I'm putting my stop loss based on my market structure. I already know that when this guy breaks up, it will come back for a retest, right? How many of us saw what I sent to the Telegram group? I sent a picture of retest to the Telegram group. It's going to help you a lot. It's going to help you a lot. So market came in, broke through, and then took out this area of support resistance, and then came to retest it exactly at 38.2. At 38.2 level. At 38.2 level. Okay? It came to 38.2 level, and then it gave me a reversal. This is a reversal candle right here. Look at this. This is a reversal candle right here. Where will I put my stop loss? Definitely it's going to be below. It's going to be below this candle. It's going to be below the swing. If at any of the swing, you should know that your stop loss will be below the swing level. So my stop loss definitely be below this guy because it's a retest and it's already going. My stop loss will be here, and then I can take my first profit at this point. At this point here, that's my first take profit, and you can see second take profit too. Let's even use the next swing. The next swing from here, market moved up to here. What happened? It came into the golden zone area, then reversed. When it reversed right here, what do? I put my stop loss below. I put it like 10 or 20 pips below. Okay? Or if you don't mind, you can even put it below the last swing. No problem. If it's within your capacity. This is just about this is much. We are in daily time frame. This is much. This is about 192 pips. This is a daily time frame, so you can put it on here. This 100 pips or 10 pips below, 10 to 20 pips. Since it's a daily time frame, you need to give more space, like 20 pips or 30 pips below the low, and then take your first profit here. You are going to take your entry. Where will we enter this trade? After this bullish candle, we have the hammer, bearish hammer here, hammer, and then the bullish. After this bullish, it shows the market has reversed at the golden zone. So if we enter the close of this candle, we'll be making our stop loss will be about 160 pips, and then our first take profit is how many pips? 260 pips. First take profit level 260 pips. And if you leave it to go, if I took it out and then in one swipe, in one daily candle, swipe to your first take profit. Second take profit will be where? Will be 435 pips. Third take profit, look at it, 64 points, that's 640 pips. This is on daily time frame. Take the next swing from here, from this low to this high, from here to here. Where did market reverse? Just at 61.8. It reversed, gave us a tweezer bottom reversal candle. If you want to be starting, you can wait for the second candle to close. On the close of the second candle, it definitely took out our first. Our stop loss will be below this tweezer bottom. That's about 200 pips because it's a daily is a daily time frame, and then our first take profit is 430 pips. It even hit the second take profit, which is what? About 655 pips. Okay, that's how you do it. So you can use it on different time frames like that. All right. Any other question on this? Any other question on this? I'm really enjoying. I love the Fibonacci tool. I'm telling you, I love it. I love it like anything. It's very powerful if you know how to use it, and I've just taught you how to use this tool. Especially when you already have a level you are looking at, a market got to that point. Okay. Well, just check with the Fibonacci tool. Look at the level it is. Take your take profit one, put it there. Take profit two, put it there. Look at this move here. Market came back here. Look at this move from here to here. Market came back into the 61.8. That's where the reversal happened. 61.8. Okay. Take profit one, take profit two, take profit three. Guys, you shouldn't leave my class and be looking like a novice again in Forex. Look at this move. It came into 61.8. 61.8. Took out take profit one, take profit two. In fact, touched take profit three before it went back. And I'm very sure that these take profit levels, they have, let's even extrapolate it. They must have been a level of structure. Maybe support and resistance, somewhere. Let's check it. Let's check it. Let's see. It disappeared. It's an all-time low. It's all-time low, so we can't even see it. So it's an all-time low level. All-time low level. Okay. So I don't know how many examples I want to show you again. I think I've shown you more than enough examples. We took a whole 1 hour to look at this too. I think you have more than enough examples, okay, for you to trust this tool. Even if you did this, maybe market came. Now this is a level where market, everything is not 100%, and I like to make sure you understand that market actually came into the golden zone beautifully, but it never reached our take profit one. It did not reach take profit one. It reached 23.6 and then it went up. So this is one place where it failed. This is one place where it failed. Okay. Everything is not always 100%. Let's take from here to here. Market came into 61.8. It did not fail here. Took out the 3 take profit levels. Okay. I think we've done this before. I'm not sure. From here to here. Yeah, we did this before. Any other question in the chat? Sir, first, second take profit point. Is it that one can take just any one of them, or we can take all? The answer is yes. You can take all. I can take any one of them. How do you take all? For example, if you have enough capital, you can place 3 trades. That's one way you can take all. Once you see this reversal, you can take 3 trades at the same time, maybe 0.01. For example, you have good money and you want to use 0.03. Instead of using 0.03, you can take 0.01 in 3 places. Take out one when you get to this place. Allow the other 2 to run. Take out the second one when you get to this place. Allow the third one to run. And then when you get to this place, take out the third one. Okay? But of course, when you've taken out the first one, you can move your stop loss to where you entered the trade. For example, if market has come and taken out your first take profit, you can move your stop loss. Maybe your stop loss was around here. You can move it into profit. You can actually move it into profit. Okay? I don't know if I can. Let me see if I can show you how to do that. Ooh, which account is this? I mean, this is not. Okay, maybe when I have a demo that available, I'll be able to show you how to move, or maybe I'll do a video on how you can move your your stop loss profit, so that you know that the market, you're already in profit, and then even if it comes back, you will not lose anything. I'm not sure I can do. Market is already, it's almost closed, sir. Market is almost closed. Let's see. Let's see. Market has closed, so we can't even take that now. Market has closed for the week. Okay, so that will be all for today. Any question? What do you think about the Fibonacci tool? What do you think about it? Let me have your comments. What do you think about the Fibonacci tool as a confirmation tool, and do you think it's going to be useful for your trading? What is one Fibonacci tool? You may need to go over this video again. Okay, when I drop it, you need to go over this video to master how I'm using the tool. What I've just done, there are two types of Fibonacci tools actually. Maybe I should mention that before I stop the recording. There are two types of Fibonacci tool. We have the Fibonacci retracement tool, and then we have the Fibonacci extension tool. Fibonacci extension tool. Okay. Fibonacci extension by default is not here. You have to add it. So you right click on customize, then you see Fibonacci expansion. Some people call it extension. Fibonacci expansion tool. Fibonacci expansion is to that take profit level that was showing you. It actually helps you to look at possible take profit levels. Okay. What I've done in my own is that I've combined the two into all those negative levels I put there. They are actually doing the work of the extension or the expansion tool. Okay, so I don't need to have to use the two tools at the same time. I've converted my retracement tool to both retracement and expansion tool. That's what I did. That's why you have those negative values. So how do I want to, for example, if I want to check this, what level, remember I take for example, take up a tool, expansion from here to here, I take it from here to here, I pull it back to the level of I'm looking at, and then we have first take profit, second take profit levels. Okay, so that's the use of the expansion tool, but I have combined that into one. I've combined it into one, so I don't need to start using two tools. Okay, I don't need to start using two tools. So when you put it, some people do their first take profit here, FE 61.8, first take profit, second take profit, third take profit. Okay, but I have combined mine into one. So that's how to use this. Pull it up where you want to, then drop it to the level of retracement, and then this take profit 1, take profit 2, using the Fibonacci extension or expansion tool. Okay, you can measure it from here to here, and you should trace it here. You pull it from bottom to top, then the third point. Let me color it also. You see. Let me bold in so you see very well. So this is how to use expansion or extension to pick it up. Want to look from here to here, how far it will go when after this reversal. Take it from below, take it up, then pull it to the level of retracement. Okay, then first take profit here, second take profit here. But for me, I combine the two into this two. When I pull it up, pull it here, it gives me all the information I want. Okay, this is my own first take profit, my own second take profit, and then my own third take profit level. So that's how I use That's how I use my own. So I've given you advanced Fibonacci retracement training. Okay. All right, guys. So that'll be all. That'll be all for today. I hope you